Today was a crazy day on the markets. I want to start with the daily chart on SPY. Inflation data seemed to cause some ruckus, but at the end of the day, you can see there was just a little gradual incline here. I do want to point out that implied volatility peaked on December 30th. At least that was the last local high we had before a big push down, and now we're seeing the implied volatility is really kind of halved, coming off of 32 down to about 15. It still characteristically looks like a three-wave ABC correction heading higher. You can see now that this downtrend actually connects those peaks. There's still a little upside there, so that there's a little bit of more room on the daily to come test that 200 EMA, and that downtrend's right there. And there's going to be a lot of resistance as well up here at 405. So there really could be some more upside. There could be. But do I think it's going to happen? I don't know. If it did, it'd be like a pre-market move, and then you'd see a big red candle filling that gap right away, and then the markets may dump lower at that point. Now, in the hourly time frame, it's important to acknowledge that there is a divergence in the RSI. So the peaks between January 9th and today are relatively flat. I think they're 1 point off. And the price has risen a lot more in comparison. This does qualify as a divergence. I think technically, if you want to really split hairs, you're coming in at 75.4 on the 9th and 76.7. So it's like, yeah, higher high. You got a higher high on the RSI, but I mean, it's like not really all that much higher. It looks like a double top in the RSI. And the RSI will form chart patterns. It's a thing. Okay, so that's SPY. Really expecting more downside. You can look at yesterday's video if you want, get some more detail there. Let's hop into AMC. On the hourly time frame, yesterday I was saying that looks good, right? And sure enough, we did see a pump higher. I do always expect these things to drop, though. Always. When they make these big rises, that's great. But honestly, I'm just always waiting for them to come down. It's easier than trying to catch the rallies. No, GameStop is cool. I had called for this push up to $19.50, even $21 even, and today we closed at $20.62. This was a move I anticipated, and you can see I kind of thought this might be the top. Okay, now this is the top. So corrective move up, A, B, C. Implied volatility here rising on the hourly, which is kind of curious. GameStop has me kind of scratching my head because I feel like it might go up. It looks like it might go up. It's testing its well, on the hourly at least, it's testing its 200 EMA. Let's go look at the daily. Got ways to go before we get to the 200. It'd be kind of cool to watch GameStop go straight up in the RSI to 70 as it comes up there, but we'll see what happens. There's probably going to be a turn when the RSI comes up to around 50. That's typically where you see trends continue or extend. There's a period of consolidation here in January. You can see the RSI moving around there, failing to rise above that 50 level in any meaningful way, led to another decline. And then we had a completion of a motive wave, the RSI bottoming just around 30, and this motive wave count ending there. And we have a push up and a corrective push up, and the RSI is rising. If it's just a corrective push, we should see it turn down, but the implied volatility is rising. Again, when implied volatility makes a signal like that, it's worth watching. So I'm going to have to keep an eye on GameStop. SLV on the daily, you can see still moving through this corrective pattern. Not much to see there. I think with GLD as well, we got another high. This is crazy. GLD is just like, I don't care what's going on. Just whoop, this goes up and up. So I am not getting the retrace I was expecting. And at this point, it's tough to say because with the RSI moving into overbought but continuing to be strong means that we could see a lot of price action here where gold explodes, and that would be so cool. I'd be so happy with that, but I'm nervous to get in at this point because I think it could correct. Let's check out the dollar. Again, I thought the dollar would bounce. It's not bouncing. It's actually going down. It's continuing its way down, and geez, there's so much uncertainty there. 200 moving average on the daily here is proved to be providing no support. I mean, you'd think that the price or the strength of the dollar would at least come back up and test that. There was a little retest here, but after that breakout on the 6th, but it's not really convincing. It's pretty short. I had some trades today, a lot of trades today. So AMC 650 call and put that I bought yesterday for fun. I actually managed to sell that call at a profit. Just took a small loss on the put. A whole, well, I don't know what the loss was actually. Or I can look at it right here. So that $4 put, I think it was that? No, that wasn't it. It must have been $4 put, $2. And what did I buy it for? Like, oh, I have my trade price here. That's why I can't tell. The trade price is what I pay for it. The mark is the current value. Mark change is just the difference. Profit loss at open is based on the daily, like the opening price of the day, and so is the P&L of the day. So like you won't necessarily see the total profit loss if I hold a position for over a day. But like this 650 call, it came in good, and my profit margin was only 250 on the day because most of the profit occurred over the gap. So I did take profits on that call pretty early. And then I had a $5 put today, and I did make money on that. And I bought and sold that pretty close together at 642 and then at 650. So for a whole 8 minutes, I got in at 32, out at 44. And then I said, hell, why the hell not? I'm just going to buy it again for 38. Of course, now it's not nearly that high, sitting around $19. And that's because AMC closed at what? $5.02. And I'm holding a $5 strike put that expires tomorrow. This is me playing in the markets. This is not advisable. This is like, I am having a good time. I'm having fun. Don't think you're gonna get rich trading like this, because you're probably not. What else did I do today? Oh, I bought a call on SPXU, the 1550. It looks like we're at 15 right now, so we're 50 cents off of the strike. It expires on Friday, and you can see currently the trade price was 17 and it's at 5, so that's a big red there. That's okay. I'm going to hold because I have a gut feeling that we're going to get a rejection, and it's going to be defined by an absolute thwacking in SPY. It may be because pre-market opens above the 200 EMA. I do expect contact with that EMA during market hours. I do. What I want to see is, what do I want to see? I guess I don't really care. But my thesis is that we're going to go down for a long time, and that we're probably entering into a third wave extension at the, let's see here, it'd have to be at the minor degree. And that would be confirmed once we get a new low past 376. So per my hypothesis, if we are in a complex zigzag and are heading to a new low, then we should not see a break above 408, and we'll see a new low below 376. This is a very critical defining time. This is occurring to me. I bet you we get like the dumbest thing ever. I bet you we get like a big triangle through here, right? I bet you that this will be like the defining. Yeah, I bet you. I'm gonna leave that there. I'm out of here.